Welcome to December 12th Principal Profit Trader Coaching Call. We're here going to take a look at the charts. We're going to get right to it. So, where are we with Bitcoin, right? We're in a sideways ascending channel, right? So, even though there's a potential for a bounce breakout, we also know that if the balance fails, Ethereum got kind of its balance breakout and then it topped out at moving average resistance. If it doesn't happen, then the balance can extend itself and then potentially even retest the lows of balance, right? And that is definitely something that was on my mind yesterday when I gave this short signal when we had a selling tail into this zone. And if you just, this is basically on the daily, the top of this trading range. And if you just look at the previous market behavior, when we got up there and the price became exhausted, sellers stepped in and they stepped in aggressively. So these are almost like false breakouts or climaxes reversals. So this might seem aggressive to short this on first tense. This wasn't like a wide double top or something like this top building in the overnight session. This was a fading short, right? I was fading that resistance zone. I faded it at the back of the zone when we saw the tail, and that triggered an entry. At the time, too, there was also a vertical volume spike here. Probably see it better on a smaller time frame because there really wasn't much volume all day. And when it got towards something halfway decent, it usually marked a reversal point. So there was that going for it. And just the nature and the strength of these resistance zones. So if we go back in time, right, the highs of balance obviously up here, touching here, here, a little bit of here. But, you know, this zone here was basically this touch point, right? We hit here, we went sideways, hit here, we went down again, and then we went back there and touched. That's a zone of confluence. It's worth a shot, right? Because you can maybe take two chances up here and get more aggressive because of the confluence, right? Now, if you faded just yesterday's high, which arguably, right, we on a sideways calls, you would fade the high of the day if it went 100%. This did not work out, this trade. We got out quickly. We didn't wait till it got to the next zone. We got out quickly here because at this moment in time, there was a little bit of sustained momentum against us. There was not a buying tail and it wasn't overexhausted. And this isn't really a strong zone of confluence, right? It was the high of the current day, right? We overshot here, touched here, and had some issues. But when we just got out of this, there was a little bit too much strength here. And coming up here possibly was a little bit too aggressive. So we learned from that, but we're still going to follow our system, which is to fade a key reference area on a non-trending sideways day. So when it came up here to the back, we shorted it at the back and we caught this move here, right? I have 6.5% left on, which I might be getting out of, but you know, odds are we might get another leg down, at least intraday. One of the things that we know that if we do have a downtrend day, 90% or so of the time they do end in the last few hours of the day. So, you know, decent move from here to here. We caught some of that and we have a runner in. Now, zooming out on a larger time frame, where are we in the cycle? Well, first of all, no one knows the future, right? We have to understand that. And just looking at what we see in this 2 week chart, right, we're obviously at a very strong support zone here that's multi-year here. You can draw that here. So it's possible, right, that this will go sideways more and then eventually break out. But one of the things that we're looking for, which kind of happened but then didn't happen, is this 2 week RSI stochastic cross. You can look at the week and the 2 week because while the week already has crossed, right, I just want to zoom out a little bit because I have a Bitcoin monthly chart that's different than this. So while our RSI momentum indicator has pretty much bottomed and it hasn't been this low since a couple of years ago. Our timing of it needs to be a sustained cross up. You see how when we had a sustained cross up here and marked this trend? Right now, we had it yesterday, but then it kind of is at an indecision point. Whether, like, basically it's either going to make this type of a move or it's going to go sideways for a bit and then make some type of a move. You notice it made the cross right at this time cycle node here, marked it perfectly. Also here, there wasn't really a cross up, but there was a low extreme here at this time cycle node. And then if you got in there, the confirmation was the following month. Either way, so this can be considered a lagging indicator, but at the same time, it does confirm price, and we do know that trends start from balances, and this really hasn't balanced, in my opinion, long enough to start an uptrend up. This went 1, 2, and then on the third week, it went up. We haven't even completed the second week. And we also had signs that this was stronger. One, this was first test of a bigger picture bias support zone where the intermediate term downtrend can now get reversed by the big picture bias, right? And we also had the previous 2 weeks, the previous month, mid-February, this hammer candle, which shows that there was a buying tail at this moving average, which is the 21. So we already saw a previous buying tail. There was evidence of prior activity. So once we had a bearish candlestick pattern, fine, you don't go in that week. Then we had a pause week contraction. We had another sideways kind of a spinning top, and then we had the launching point of directional conviction. This one we've had the pause and we've had this spinning top. We might need another down candle. To 74,000 would be probable. That happened 1, 2, 3 weeks, 1, 2, 3 weeks. Just kind of giving an idea of human behavior. Everyone's kind of feeling each other out. We need this to cross, and it hasn't. It did yesterday or 2 days ago, but then it's kind of now at this almost, we don't know yet. Slightly, but not anymore, right? Who knows? We need something a little bit more. Now, if we go on the weekly's fine, right? But that's not really going to give us the timing of it. It's kind of indicating that, this downtrend now is in control by the bulls, but it doesn't always pan out as well as the larger time frame. This time it did, right? If we go here, if you bought here, there was a cross up, right? But at the same time, look, even though it's crossing up, this was going down. So that was sort of a divergence. But your capital's tied up now for 1, 2, 3, 4, 5 weeks. 1, 2, we're not even done with the third week yet. I'd be surprised if it just goes straight up. I'm all for it though. But what you're for and what we can possibly see here are not always the same. Like I said before, once this 100 MA is broken, right, and this 80,000 level, 70 to 80,000 levels broken, I mean, we could be in a potential balance breakdown, shoulder, head, shoulder, and we could be in for a deeper pullback. But as long as this is holding as support, as long as this major support zone is intact and we're consolidating above it, there's a chance that the bulls on the bigger picture time frame can gain control again. Like I said before, what we need to see is a cross of the stochastic RSI here of blue over orange. We haven't got that yet. Obviously, there's momentum indicators saying that we are over whatever, but it doesn't factor in the timing of it, and we don't want our capital to be tied up. And also, don't make this necessarily the holy grail. This could be the time where it doesn't work out and it breaks lower. There is no holy grail. Yep. See, major zone, broken resistance across multiple cycle years acting as support in the context of this pullback, right? That so far is sort of the pattern. It is building a giant trading range. And, consolidating above this support is confirming that. If we get the opposite of that, and we didn't get this consolidation candle, but we got another red candle that broke us below that, then we'd be in a position of a balanced breakdown, bigger picture pattern, which God forbid it could, I'm not saying it would clone us down there, there's other support, but at least down to maybe here, 70 to 50. Technically, yeah, we would be in a extended bear if that broke, but we'll see. Obviously, the monthly hasn't crossed yet. So that remains to be seen. This is a critical spot for Bitcoin because if this breaks, then we're going to have a testing, right? If this breaks this trend line here, right, then we have a balanced breakdown pattern. And if we have a balanced breakdown pattern, then any of the all this is this 80,000 level is in play again. But there is this ascending channel that could potentially take us up to this moving average, like it did Ethereum. But even Ethereum got rocked back. Now, if you were just doing a basic, what would stand out after this day, right, would be the hook from extremes and the fact that you had a bearish selling tail spinning top candlestick pattern at resistance, which is the bottom of this bigger balance. So even though this is a pattern in and of itself that we broke out of, it is now testing the bottom of a larger pattern. And we know on first test of these things, there's often large reactions, and we got a large reaction back to this moving average. What I'm looking for both Ethereum and Bitcoin is a zero line reject, right, for a low risk one. Like shorted last night, got a runner in. Wouldn't be surprised if we close with a heavy candlestick pattern since it's a downtrend day and the rest of the markets are red. This would go lower and test the bottom of this balance. But this is starting to turn a little bit green, but there's not enough separation. I want this. I want a zero line reject. Doesn't even have to be that crazy. This is almost touching this. It could be this. Even I just want something to indicate that this momentum on the down is a little bit getting exhausted. So far, not really seeing that, but we have to see how today closes. Let's take a look at the S&P. If no one shows up with questions, then we'll do a few more markets, but we're not going to get too into it, right? We saw a V pattern with sideways, now it's dipped, right? We know after multiple leg counts up that are +6, the markets are prone to pullbacks. It was asked last night if this would be a good short, and the short did work out, but as we discussed on the coaching call for the private one-on-one, that if you were thinking about shorting this day, just remember, since the RTH open, even in the early morning, the bulls were in solid control with a confirming +1,000 on the 80 line. So even though this technically with the leg count and you had yesterday's high and all that, it overshot, right? And that's where, when you have a bullish intraday bias with sustained momentum and then the tick in the AD line confirming it, right? What am I looking for? I'm looking for. Then, you may want to employ something, in addition to these highs, which is a horizontal, you could think about trend line, directional, where, granted, you didn't know that was going to happen, so maybe this isn't a good example of that, but let's see if we can try to extrapolate. It's not bad, you know. So if you were trying to draw kind of, you can cheat a little bit here, catching that one. So yeah, I mean, it didn't quite hit, but that's the idea that these things can produce these climax reversals. Now, okay, so let's just say that there was too much for you to short. That's why I was hesitant to give this guy a short signal, although you could have financed here. That was plenty of points too. But like I said, a V sideways dip go pattern, right? There's this whole idea that you don't want to short a V, even though there was on the daily good reasons to think about shorting up there because it was overextended and so on with the leg count. There's this idea intraday, the intraday bias was completely reversed. So it's like it feels right to short this, but this V will often produce a 10 to 30% overshoot, right? We do 10 here. So, I'm not saying you have to short this, but that's the idea that's when it can get exhausted. Now, when it closed back underneath the balance here, right, that's potentially a false breakout pattern, which is a bigger picture bearish pattern, which means the leg count was also bearish because it was +6, which you were at major resistance. So the resistance was stronger than the support. The larger time frame bias was bullish until it went to here where it could potentially be neutral. So there's this false breakout pattern where we're going sideways. That's when the shorts have lower risk now, right? You have touch point, and now you have something to, right? I mean, if you shorted here at 12, I'm not saying you got to put a stop that high, but the idea is that this already popped back in and then going up into because the false breakout pattern increases the odds that you get that. There was also some bearish stuff on the 80 line and NYC tick. You can take a look at that as well because we have that as an added edge. A lot of people trade the ES. Oops. A lot of people trade the ES in the channel. So that's what we were kind of focused on among other things today. This idea, basically, we said this would be a good short setup because it's a pullback continuation, and the 80 line was confirming that by hitting minus 800. It wasn't opened at this moment in time. This was prior to 9:30, but based on the false breakout pattern and that the overnight session produced this pure trading range, this was actually a pretty good short setup. Now, let's say you didn't hit that, right? You had this pullback here at 10:45 because the momentum now, the bounce breakout, you're already preparing for a reversal because it's overextended on the daily call, right? That's why I just showed you that first. Then you come down, top down to here. Then you say, okay, well, if we popped up here at 1050, is it bearish on the 80 line underneath the hood? Well, it certainly is. It's below zero. That's what you'd want to see, right? I wouldn't tell you to short this if this was like at plus 1,000 or plus 2,000. Like, oh my God, this could be a V reversal, right? But it was confirming price, so it wasn't against you. So that's not bad. Then you go here at 1050. Let's see what the tick was doing at 1050. Right? It was actually, as it was popping up bullish, it was actually below zero. So that's great, right? It shows you the moment to moment. And also look at the skew. So while this is showing you the number of stocks that are up or above compared to yesterday's close, right? We closed up here. So being down here, you'd expect it to be bearish. That's good. You want it to confirm price. You don't want it to be the opposite, like a divergence. This is showing you moment-to-moment buying and selling pressure. I'm not looking for divergences or disconnects. I didn't describe that yet, a disconnect. I'm looking for skews through time and also extremes. So we spent most of the time before 10 something, whatever it was here, 10:30, 10:50, 45. We spent most of that time below zero. So that's a bearish tick skew. That's an added edge top down. Like these are great. You can make a lot of money knowing what to do with these pullback continuation setups using the tick in the right context. Now, at this moment in time, if you took it, you had the momentum, good trade location. You just broke a balance, right? You had the intraday bias on your side. There's a lot of things on your side. The tick and the 80 line were bearish skew, right? But let's say you wanted to take it late in the afternoon. This was at 1 o'clock, 1:05. Yes, the intraday bias is still down, but we've been going up since about 11:40, right? So that's almost 2 hours actually. So that by that moment in time, the sustained momentum is not bearish. It's not bullish, but it's not bearish. It's like kind of neutral. But the intraday bias is certainly bearish. What was good is that if you look at, so why would we say take that? Why was I confident to say to take that? Besides the other markets down in the bearish intraday bias. Well, this is at 11:45. This is at 11:45. Let's go up to 13:15 was here. 13:45, 13:15. Let's go to 13. Okay. So you see how that was that, right? And then this was at 11:35 here. Let's draw it so we can see it. I think it's because I'm screen sharing. It's kind of hard for me to draw this a little bit. It's like not really letting me nuance it. Let's get rid of it. This is not really anyway. That's not showing me what I wanted to show you a straight line, relatively speaking, because 11:35 was here, and then 1300 was here. So it's kind of going sideways, not doing anything, right? So price should do that too, but instead price is going up, up, and up. That's a bearish divergence. Price went up for 2 hours, but this thing held sideways. More importantly, it's holding at minus 800. That was a pullback, late pullback continuation setup, but didn't really have momentum. So not necessarily a pullback per se, almost like we're fading the VWAP kind of, because this is a momentum setup, pullback continuation. But yeah, we got the continue. There was some continuation. There's also a bearish tick skew, but you can see at 115, it starts to get more. Before that was a bearish tick skew, but then when it started to go sideways and then up, it started to be two-sided, which showing you that it's going up a little bit, but still not super bullish. And definitely there's been more tick extremes on the downside of minus 700 to minus 800. This thing's not even getting up above 600 at its highs. So there's the extremes were up to over a minus 1,000 were more extreme on this side, and the time spent below it was more if you just look at the skew. So that's all confirming that we should have shorted there. Obviously, the best setup was to understand the false breakout pattern. Your intuition was already right to start shorting that at, basically fading the all-time high, so to speak. Except yesterday had a bullish intraday buy, so that was harder to short. You could have caught a little bit of this, but like you said, probably got stopped out earlier here because this is a lot in the S&P. It doesn't look like much. This is a lot. You don't want to have a 20-point stop in the S&P. Once we got the false breakout and the gap play down, remember I said one of the key reference areas for futures is gaps. So every time we came up and tested the gap here, now we have a pure sideways day where now the high of the day and the gap are forming an intraday confluence of resistance. So, getting towards the open when we came up here at 9 o'clock before the open, you could have shorted that. Or if you were up at 3 in the morning, whatever, because, use a pure sideways day so far with daily call good odds for more reversal energy because of the bearish leg count. I'm pretty sure there was a hook. Let's see what the hook from extremes were. Yeah, you see, it was up here. It was almost a hook from extremes on, almost like a reversal. And then we kind of knew to short that. Yeah, it's a V pattern, but it's also a V almost at the end of a move, right? It's not like we got this V sideways dip go thing down here, right? We kind of got it after 1 leg count, 2 leg count, 3 leg count, 4 leg count, 5 leg count, 6 leg counts prime for reversal, right? Just be aware that when it came up here on first test to test the all-time highs, right, there was good odds for a tradable reaction. Just it was harder to catch intraday yesterday because if you were using the day before as high as a reference area, we did that overshoot thing that we talked about on the private one-on-one. So once you saw the overshoot, and then you did your daily call for bigger picture patterns, you would have classified that as a false breakout pattern, at least on the intermediate time frame. You said, I'm going to short this again with the top building in the overnight session, or catch the pullback continuations, two of them. In the intraday session. So we pull back, right? Bearish engulfing pattern. Oh, we're on a different chart. Oops. Yes. Yeah, we already talked about that. And then we'll switch here. Now, for Bitcoin, I don't have that. So you don't need to use the market internals per se to trade. But if you use them contextually correct, then they can add an extra edge as long as you're doing your work ahead of time, top down. Right? You want to do your daily call first and then use those as an added edge. You don't want to start looking for those and seeing everything without an added edge. One of the mistakes new traders make is they look at that indicator and they start thinking it's the holy grail and they start misreading everything. Sometimes it's the opposite of what you might think. Some of the ways that I use it are divergences and disconnects, and then the trap trader setup, all of which you can search for on the channel. I'll show you what a disconnect is here. We well, this is sort of a trap trader setup, right? You can see in the overnight, we tried, we're constantly trying, but we're building this sell wall underneath the inverse dragonfly, selling tail, the false breakout pattern. So when, as this starts to open at 9:30 here, and you start to see the momentum going down, and you're seeing that, we opened here, we closed here, and we're opening around here. It should be around zero, right? But instead, it's actually pretty positive, almost at positive 750. Yet, despite that, it's struggling to even break today's highs multiple times throughout the night. That is what I call, then there's going to be trapped longs. I've said this before. I've called this setup, it's an advanced setup. Because people sometimes say, oh, look, it's up to almost 700. Now it's going to go up. No, this is a contextually aligned setup. It's basically, there's a couple of rules for it, where it's like it has to be trying several times, and then despite the strength, when you go up, it still fails. Then you would short it because it's going to have trap traders. At the same time, if you wanted this to break out, even though this was the bullish for the counterintuitive trap traders thing, you would think it would be at zero, but it's actually a plus 800, and it's still struggling. This was actually showing a lot of mediocrity and weakness. It was going down as this was going up, so that the buying and selling pressure was very weak. Not what you would want for an uptrend after we already had a false bearish breakout pattern. A false breakout pattern is a bearish pattern. So those are the things that you start to look for when you start to trade correctly with a top-down multiple time frame approach, and then you can start adding in these tools to use them in the right context. So let's see if anybody's in the room. Nobody is in the room. It is December. I'm going to save this chart, X this out. So yeah, closing with a bearish candlestick pattern right now. I mean, granted, the market for Bitcoin doesn't close until 7, so it's a little under 4 hours. So yeah, I mean, keep what I'm saying with a grain of salt. So the candlestick pattern is bearish right now. We're closing heavy. We're starting to kind of form an inverse zero line reject, so that would be good. If you were doing support and resistance category, anything up here, the resistance would be dominant because you're near these highs. Here, you're starting to get near support, so you could actually say sideways, but you're not near strong enough support where you would only want support. So I would say sideways for that. I'm just going through all the different things that we do. Dog leash, we're right around these moving averages now, so it's a sideways. Even though there's more of a pull upwards, we're sort of just, I would say after we touch this, there really isn't that strong of a dog leash now because we're just going sideways around it. CCI, I would say sideways to up because it's not a great looking one yet, but it is a zero line reject. Prior momentum would be bearish, closed heavy. What else would we be doing? We looked at the monthly, we looked at the weekly. We could add the 2 weekly. Those are sideways. So overall, yeah, the call is sideways, right? But with a slight bearish bias, if the candlestick pattern closes heavy like it is now, and we don't get more of a pronounced zero line reject. But yeah, it would be, sideways, great trade location, have to be wide double bottoms or wide double tops because we're just in a sideways trading range, which could just continue to go sideways through time. Now, if we close with some kind of grandiose pattern, that would be great. We'll see what happens. But as of now, closing kind of heavy. And, this moving average has acted as support, but other times we've just traded around it. Support, this is resistance, broken, broken, just trading around it, and support again, broken. Now we're kind of into it. I have a runner on, so if it acts as support, great. If it doesn't matter. I think I have like 6.5% left on this trade. Not much. So let's see, how long have we gone for? 217. 245. Let's see. Shoot, stuck on a business call. Sorry, I'm missing this, but I'll try and jump in if I can. Okay, no worries. Yeah, if you got a trading question, shoot a trading question into the channel. Yeah. We need a confirmed cross. We didn't get more of that overshoot, obviously reflecting Bitcoin's price today. I'm just looking at these charts one more time. Weekly, that's in good shape. That was the cross. But keep in mind that this moving average here, why do I have a 9 there? That shouldn't be there. Sometimes they got to add up. We'll fix that later. See if there's any questions in the channel. And if anyone's watching who's not a member of the channel, I don't just talk about these trades. I give them live, real time, and bet size. So this was a short setup that I took. I gave this yesterday at 436. We go to the chart here. There it is. Trading the back of the zone and nicely into profits. And boom. Okay, folks. Well, this will be a short one, but I'll be doing one next week for sure. And, hope everyone's trading well. And see you guys in the room. God bless.